Greetings to you all, my beloved students. I believe that you are all well prepared for the commencement of 2024 academic year. So as IE Academy, we avail ourselves to give you all the support that you need in order to succeed in your academic journey. So guys, please keep on supporting our social media pages and also subscribe to our YouTube channel. So in this video, I will be doing main online summative assessment from MANCOSA, which is a member of Honoris United Universities. So the name of the module is Financial Planning and Control. So this module is offered in various programs, which include the Bachelor of Business Administration, Bachelor of Commerce in International Business, the Bachelor of Commerce in Retail Management, and the Bachelor of Commerce in Supply Chain Management. So guys, this module is for students who are doing year 3. So this is for third year students, and the paper was written on the 30th of November 2023. So the duration is 3 hours, and the paper is out of 100 marks. So we are going straight to question 1. So we are going straight to question 1. So as you can see here, we have question 1. Question 1.1, question 1.1. So we're going to read the required parts of the question, and then after we're going to analyze the information that is provided. So required: use the information provided below to prepare the pro forma statement of comprehensive income of Mentos Limited for the year ended 31st December 2024. Note: the statement must include the gross profits, operating profits, profit before tax, and profit after tax. So now let us analyze the information that is provided in this question. So the following budgeted figures have been provided by Mentos Limited for the year ended 31st December 2023. So these figures that are given here, they are for the period ended 31st December 2023, and we are required to prepare the pro forma statement of comprehensive income for the period ended 31st December 2024. So here we're going to be projecting for 2024. So guys, we are given total sales, and we are told that 60% of sales are for cash and 40% of sales were made on credit. So the total sales balance or figure is 2.7 million. And we are given the cost of sales, 1,080,000, administrative and selling expenses 810, interest expense is given at 30,000, so 30,000 interest expense, and we have profits before tax of 780,000, and we have profit after tax 569,400. So guys, before we read the the additional information, can we quickly throw the format here, because we know that they want us to prepare the statement of comprehensive income. So I want us to quickly prepare the structure or the format that you're going to follow as we're going to be preparing the comprehensive income. So this is solution to question 1.1. So we are preparing the pro forma statement of comprehensive income for the year ended 31st December 2024. So guys, we know the format that we use when we prepare the statement of comprehensive income. So in the first line, we disclose the sales figure, and then from sales, we subtract the cost of sales. And the difference between sales and cost of sales is the gross profits. So in the question, we are not given any income, so we will not show the other income line. So the line that is given here is the one for administrative and selling expenses. So we have administrative and selling expenses. And then from gross profits, we subtract the admin and selling expenses. So, and the answer there would be the operating profits, because we are required to show this line, operating profits line. Operating profits. And then do we have interest expense? Yes, we do have interest expense. So from the operating profit, we're gonna subtract the interest expense, or you can say finance cost. So it doesn't matter. So interest cost or interest expense. So you can put it any way that you feel like to. And then from the operating profit, we subtract the interest cost or interest expense, and we will get the profits before, and then obvious we're gonna subtract the tax expense. So subtract the tax expense, and that would give us the profits after tax. Profits after tax, or you can say profit for the period, for the year. So guys, this is the format of the statement of comprehensive income. So now we're going to read the additional information and do calculations where necessary. The following forecasts were made for 2024. So number one, cash sales are expected to increase by 20%, whilst credit sales are expected to increase by 80%. So guys, now we are making forecast for 2024. So remember, we are given the balances for the 1st December 2023. So we're going to use the balances given for 2023 to forecast for 2024. So now we are told that sales are divided into two. We have cash and credit sales. So cash sales is represented by 60%. And for 2024, cash sales is expected to increase by 20%. And credit sales are represented by 40%. And we are told that the credit sales are expected to increase by 30% in 2024. So guys, the 2.7 that is given in this statement is the total sales. So total sales comprises of cash and credit. So let me show the workings so that you can follow what I am explaining here. So we're gonna have our workings. So guys, we are given total sales for 2023. And the balance for total sales is 2.7. So guys, total sales comprises of cash and credit sales. So to get the exact balance for cash sales, we're gonna take the total sales of 2.7 and we multiply by 60%, because we are told that cash sales are represented by 60% of total sales. So now we can use our calculator. 2.7 multiplied by 60%. So I'm getting 1,620,000. So this is the balance for cash sales. And then for credit sales, we're gonna do the same. The balance is 2.7, which is the balance that represents the total sales. So now we want the exact balance for credit sales. So credit sales are represented by 40%. So we multiply this by 40%. So now we're gonna change 60 and put 40% there. So the balance for credit sales is 1,080,000. 1,080,000. So guys, now if you add cash and credit sales, you should get the total of 2.7. So total sales is made up of cash and credit sales. So now we want to forecast for 2024. So now we want to forecast for 2024. So now we want to forecast for 24. So this is for 2023. So these are balances for 2023, the one that are given in the question. So now we want to determine the balances for 2024. So guys, we are told that for 2024, we are expecting cash sales to increase by 20%. So now we're gonna take the cash sales balance for 2023, we multiply this by 120%, so that we get the increased balance for 2024. So 1620 000 times 120%. So we are increasing cash sales by 20%. So for 2024, we're gonna have cash sales of 1944 000. So that is 1,944,000. So we do the same for credit sales. So credit sales are expected to increase by 80%. So guys, we are told this information is given to us. So credit sales are expected to increase by 30%. So we do have credit sales for 2023. The balance is 1,080,000. So this balance should be increased by 30%. So multiply by 130%. So the increased value of credit sales for 2024 is gonna be, so now you just use the calculator. 130%. So the expected credit sales for 2024 is 1,404,000. So guys, remember in the statement of comprehensive income, we show the total sales. So now how much is the total sales for 2024? Expected total sales for 2024. So guys, we know the total sales comprises of cash and credit. So now to get the total sales for 2024, we're gonna add these two: cash sales for 2024 and credit sales for 2024. So we're gonna add 1944,000 and 1404,000. So the expected cash, the expected total sales for 2024 is 3,348,000. So this is the balance that we're gonna show in the statement of comprehensive income. So now let us record this in our statement so we can show workings in brackets. So cash sales for 2024 is 1944,000 plus 1404,000. So when we add these two, we get the total sales of 3,348,000. So guys, we are done with these workings. So I hope you understood everything here. Now let us move on to the next one. Number 2. The gross margin ratio is expected to increase by 5% points. So the gross profit margin. So guys, here you must know how to calculate this ratio, gross profit margin ratio. So the gross profit margin ratio for 2023 is not given. So let us calculate it. So once we get the gross profit margin ratio for 2023, it's going to be simple to forecast the one for 2024. So I will show you how we're going to do it. So we're going to first calculate the gross margin ratio for 2023. So the formula to get the gross margin ratio is gross profits divided by sales. So guys, we want the gross margin ratio for 2023. Obviously, we're going to use the figures from 2023 statement. So we have the gross profit for 2023. So guys, we do not have the gross profit for 2023, but we can be able to calculate it because we know that the gross profit is the difference between sales and cost of sales. So we're going to take sales for 2023 and subtract cost of sales for 2023. So that will give us the gross profit for 2023. So the difference between these two will be the gross profit for 2023. So 2.7 minus cost of sales of 1,080,000. So the gross profit for 2023 is 1,620,000. 1,620,000. So this is the gross profit for 2023. So now we can sub in the amount here. So 1620,000 divided by sales for 2023 is 2.7 million. Obviously, we're going to multiply by 100 because we want to get the percentage. So this ratio is calculated as a percentage. You must always remember that. So now we're going to plug in this in the calculator. So 1620,000 divided by 2.7 000 multiplied by 100. So I am getting 60%. So the gross margin ratio for 2023 is 60%. So we are told that in 2024, this ratio is expected to increase by 5%. So now to forecast or to estimate the one for 2024, we're going to add 5% because it is expected to increase by 5%. So now we get the gross margin ratio for 2024. So the gross profits margin ratio for 2024, it's going to be how much? 60 plus 5, that is 65%. So guys, we use this ratio to calculate the gross profit. So now if you have the gross margin ratio, you can determine or you can calculate the gross profit. So how do you calculate the gross profit if you have the gross margin ratio? You simply take your sales figure. So in this case, the total sales figure is 3,348,000. We multiply this by the ratio that we have calculated. So the gross margin ratio applicable in 2024 is 65%. So this will give us the gross profits. 3,348 times 65%. So I'm getting 2,176,200. So it's 2,176,200. So obvious now, the cost of sales will be the balancing figure, will be the difference between sales and cost of sales. So now to get, it's going to be the difference between sales and gross profit. So to get the cost of sales, we're going to take the 3,348 minus the gross profit of 2,176,200. So now here is the cost of sales balance, 1,171,800. So the cost of sales, so 1,171,800. So now to check if your numbers are correct, you can confirm. So you take that 3,348,000 minus 1,171,800. So you should get 2,176,200. So our balance is correct. So we have confirmed. Now we are moving on to the next one, number 3. Administrative and selling expenses will represent the same percentage of sales as for 2023. So admin and selling expenses will represent the same percentage as for 2023, percentage of sales as for 2023. So now let's just calculate the percentage of sale. So now to determine that percentage that is applicable in 2023, we take the admin and selling expenses, we divide by sales and then multiply by 100, obvious. So we have 810, which is the admin and selling expenses balance. We divide this by 2.7 sales balance and then we multiply by 100 so that we get the percentage of sales. And then we can use the calculator now. 810 divided by 2.7 multiply by 100. So I'm getting 30%. So guys, for 2023, the admin and selling expenses are represented by 30%, which is the percentage of sales. And we are told that this rate will be the same for 2024. So guys, here we don't make assumptions, but we follow what we are told in the question. So administrative and selling expenses will represent the same percentage of sales as for 2023. So for 2024, we're going to be using the very same rate that is applicable in 2023. But the only thing that will differ now, this rate, we're going to apply it on the sales of 2024, on the sales amount or sales balance of 2024. So to get the admin and selling expenses for 2024, we're going to take the sales for 2024, which is 3,348,000. We multiply by 30%. So guys, this is an expense, so we're going to put it in brackets. We're going to subtract it. 3,348,000 times 30%. So I'm getting 1,004,400. 1,004,400. So we put this in brackets. So now to get the operating profits. So to get this one, operating profits. Operating profit, we're going to take the gross profit and subtract the administrative and selling expenses. So we subtract this one and that one. So the difference between the two will be the operating profit. Maybe I should show a line here. Okay, so 2,176,200 minus 1,004,400. I'm getting 1,171,800. 1,171,800. So this is the difference between the gross profit and administrative and selling expenses. And then the interest expense, how are we gonna forecast or estimate this one? So number 4, a new loan will be taken and the interest expense will increase by 30%. So the interest expense will increase by 30%. So for 2023, we are given interest expense at 30,000. So this expense will increase by 30% in 2024. Or is expected to increase by 30% in 2024. So 30% multiplied by 130%. 80,000 times 130%. So I'm getting 89,000. So this is an expense, so we put it in bracket. So for 2024, the interest expense will increase to 89,000. And then the profits before tax. So now we want to calculate the PBT, profit before tax. So to get the PBT, we're going to take the operating profit and subtract interest expense. 1,171,800 minus 39,000. So the PBT is 1,132,800. 1,132,800. So we have the profits before tax, 1,132,800. So now the tax expense. So do we calculate the tax expense here? Let us read number 5 to find out. The company's tax is calculated as a percentage of the profits before tax, and the tax rate is the same as for 2023. Okay, so the tax rate that we're going to use for 2024 is the same as the one used in 2023. So now, to explain this, let me show you something here. So guys, we know that in the income statement, we calculated the profits before tax. And then from profits before tax, subtract the tax expense, and we get the profit after tax. So the PBT for 2023 is given 780,000, and the profit after tax for 2023 is 569,400. So we do not know this one. So we do not know the tax expense, but we know, okay, we are aware that it's possible that we get or we find the tax expense amount. So how are we going to get this amount? So we take the profits before tax and subtract the profits after tax. So the difference between the two will be the tax expense that we are looking for. So this is for 2023. Why are we doing this? We are doing this because we want to determine the rate that was used in 2023, because the very same rate that was used in 2023 will be used in 2024. So 780 minus 569,400. So the tax amount is 210,600. So now, guys, we want to get the tax rates. So we have all the information that we need to compute the tax rate. So to compute or to get the tax rate, we simply take the tax expense and divide this by the PBT, profit before tax. So now we want to find out the rate that was used. So the tax expense is 210,600 divided by profits before tax is 780,000. Obviously, we multiply by 100 because we want the rate, the percentage. So 210,600 divided by 780 multiplied by 100. So I'm getting 27%. So the applicable tax rate for 2023 is 27%. So the very same rate that was used in 2023 will be used in 2024. So the tax expense for 2024, we're going to take the PPT for 2024, which is 1,132,800, and we multiply this by a tax rate of 27%. So that's how we get the tax expense. 1,132 times 27%. So the tax expense for 2024 is expected to be 305,640. Then profit after tax is the difference between profit before tax and tax expense. So the difference between 1,132,800 and 305,640. So now we have the profit after tax expected in 2024, 827,160. So guys, we are done. So that's how we prepare the pro forma statement of comprehensive income. So guys, avoid to make your own assumptions here, but make sure that you follow what the question instructs you. So we are being instructed by the question here. So we follow what the question tells us to do. So we do not make our own assumptions. So guys, we are done, and I hope you understood all the workings that we performed in this question. So guys, thank you very much, and keep on supporting our channel. Goodbye.